I've been thinking a lot about the gold to silver ratio. And, you got Goldman Sachs and JP Morgan forecasting $4,000 gold by next year. I think that's pretty reasonable, actually, on many levels. But assuming that plays out and the gold to silver ratio were to get to 50 to 1, where it's averaged about 45 to 1 for the last 150 years. At 50 to 1, which is very conservative, at a $4,000 gold ratio, that puts silver at $80 an ounce. I mean, you're talking a double, easy double. And so when I think about where silver could ultimately go, there are so many things that are screaming silver and its value right now. UBS just raised its target to $42 an ounce. That's about an 11% increase. But when you look at all of the things that have been happening, to me, whether it be the increase in the lease rate, the lack of shares available to short or to buy to cover shorts on SLV, the massive delay from T+1 settlement in London to T+8 weeks in London, the huge deliveries. When you look at the distortions that we find in the silver market, when you look at a simple returning to 50 to 1, even if you went to 70 to 1, where it was just a couple of years ago, that puts silver at basically $60 an ounce. That's a solid, 50% gain almost. So you're talking about, I think, the value of a generation. And it seems that things are changing. The way that the market is moving. We're not seeing these massive sell-offs. We're seeing consolidation, choppiness, volatility, but the strength is something that is very different than what we've witnessed before. I'm very, very, very hopeful for what the rest of the year brings for the price of silver. I find it interesting that the LBMA came out the other day and warned of counterfeited metal, which they said distorts prices by creating artificial supply. And you think about that for a second and think this is the institution that's trading billions in unallocated bullion contracts unbacked, selling claims on gold and silver you can't deliver. Doesn't that kind of sound like you're creating artificial supply, counterfeiting in a digital form? I don't know. I'm just throw that out there. I laughed when I read that. But again, UBS is saying 38 to 42 through September 2025. They're talking just in a month through June 2026. So they're basically saying we're right there. By the way, for the people who we're recording this on Monday, the options expire today. So I expect today to be volatile, just like Friday was and Thursday. But I expect it to shoot right back up tomorrow. We'll see if I'm right when the next contract hits the board. You have to wonder, is it a conspiracy or is it reality when you talk about when Chris Powell says there are no free markets, just manipulations? The traders suck in the speculators, and then right at the end, they smash the price so that the options expire worthless. The big banks get to keep the premium on that, and then it goes right back up. They rinse, wash, and repeat. But this is a game that's much more difficult to do so. And it kind of reeks like we're getting to the end of this game. We've heard that before, but the level of the spread in the exchange for physical jumping up 250% last week, the no shares available to borrow of SLV, none when there's usually millions. The 7 or 8% lease rate, highest I've ever seen, the T+8 weeks, the deliveries. Things are changing, and it's as dumb as a mud wall to continue this game. I think they know that. I also want to talk about perception. I wrote down homes are getting cheaper in gold. Now, homes aren't getting cheaper, but they are in gold. And, people talk about this real estate deal where homes are so unaffordable. They're not unaffordable in gold if you've been holding gold, because measured in dollars, you're getting crushed. Measured in gold, you're winning. Since 2005, it's fallen off a chart. It's gone straight down, the amount of gold that you need to buy a home. it's at almost all-time lows or very darn close to it. So in other words, gold is keeping pace. The dollar is not. This is the point that needs to be understood, is that gold is not here to make you wealthy. It is wealth that keeps pace with inflation. And that's really the bottom.
Morgan, we had him on just a couple weeks ago, and he was stressing this point. He says people feel that the stock market has been high flying, but the stock market has been, they say, well, just recently the stock market has been showing some volatility. It's like, no. He says that we've been in a falling stock market, a hidden falling stock market since roughly 2000 in terms of gold. So if there are how many ounces of gold it would take to buy the Dow or buy the S&P 500, we've been in a choppy and falling stock market for the past 2.5 decades in terms of gold.
Right. So if the average price of a house is like $400,000, you're talking what, 130 ounces of gold buys a house for you right now. So, you know, what would it have been if you look? I don't have the graph on my computer here. I wish I did. It didn't transfer for some reason. I thought I had it on there, but it's a falling just like this, where in gold ounces, if you would have bought gold and put the money instead of in the bank, because you're going to buy a house in 5 years and you put it in gold, it's gotten cheaper and cheaper and cheaper and cheaper every single year. Even with house affordability going stratospheric, no one can afford a house any longer, it seems, with the cost of money and the increase in the price of houses. This is my thesis right now. I believe they are going to intentionally destroy the dollar. They're going to destroy the dollar to support the system. I think what they're doing with the stablecoin legislation is they are trying to move the majority of debt issuance to the short end of the curve through stablecoin issue, because you are seeing the governments that used to support our debt are no longer doing so, right? You have now the Cayman Islands and the United Kingdom and Ireland. It's a joke. And they understand that the amount of debt, we have to come up with $28 trillion in debt in 3 years when we only take in $15 trillion in tax revenue. We're not there. They understand that. And we're seeing less and less and less buying of our treasuries. So instead, they passed the stablecoin law where all of these stablecoins will be backed by US dollars in order to have demand for a treasury market that is losing demand. So you put that all on the short end of the curve, right? Where I think they're going to do it, and kind of blur the significance of the long end, which I'll get to in a moment. But I think that's first and foremost what they're trying to do. Remember when Janet Yellen did that? That was good for gold. That was good for stocks. It was inflationary. And I think that's what they're going to try to do. At the same time, they reshore all the gold and they're going to let it go higher and higher and higher and higher. Not very easy for the public to discern. There'll be volatility. There'll be consolidation, but it will keep going higher until people feel it's gotten too high. And then they'll probably come in and revalue it to a level much higher. And they're going to peg it to the treasury. Why would they do that? Why would they peg gold to the back end of the treasury market? The short end, the front end, will be backed by these stable coins, which they will pump out by the gazillions, because now they have this synthetic demand, not a organic demand like we used to have when we were revered and we ran a surplus and we didn't instigate wars all over the world and fund wars all over the world, and we're not revered anymore. So the back end of the market, who the hell wants, and especially when Trump talks about creating all of this money to rebuild our infrastructure. So in essence, printing money to build our infrastructure to compete with the rest of the world. They don't want to buy our treasuries. So they will just do the stable coins to get all of this demand for the front end and load the debt there. But the back end, I believe they will peg to gold. As Judy Shelton has said, on July 4th, next year, the 250th anniversary, he has said it repeatedly. Again, she keeps saying it on Twitter. He will peg the 50-year treasury to gold. Why would you do that? And you have to get gold much higher. And I think she keeps talking about gold revaluation. They will revalue gold. And I think Luke Groman, one of the smartest dudes I've ever met, he's talking about revaluing gold. He thinks they'll let it go to $7,000, $8,000, $10,000 and then revalue it to a much higher level to give the Treasury General account $5, $6 trillion in free, clear revenue without selling an ounce of gold. And we talked about how that happens. There's miscommunication on that too, because some people think that when the Treasury issues Treasury certificate or gold certificates, gives them to the Fed creates the money, takes the gold, and gives the Treasury money free and clear. Every $4,000 increase is $1 trillion free and clear to the TGA account. The Fed doesn't have control of that gold. They have control of the fiat. They're owed the money value of that gold, not the gold itself. Anyways, if they do that and peg it to the long end of the bond market, she said 50 years first, shorter durations, maybe 30 and 20, later, maybe 10. But why would you do that? Because now you can have zero borrowing costs. You can put a zero coupon on that. The gold redemption at the end is the borrowing, is the interest rate, is the inflation gauge. The more foolish we are in monetary policy, the higher the price of gold goes. To be able to get that at redemption would allow for long end low borrowing costs, almost down to nothing, which would then enable us to slowly reshore our manufacturing at very low borrowing costs, and then to grow our way out of this problem eventually. The only way you get rid of inflation and where we are right now is to produce our way out of it. And we're a long ways away from that, because in order to facilitate the amount of debt that we owe, pay it off, just the $28 trillion in maturing Treasury debt by 2028 with $15 trillion in revenue, we're halfway there. And that doesn't take into account the $3 trillion a year in deficit spending. So you're 25% of the way there. So you have to inflate. They're going to destroy the dollar. They're going to inflate the crap out of it. They're going to use the stablecoin legislation to front load debt issuance into the front end of the market. And then they will let gold go to the heavens. I believe this. Truly, I do. And they will peg it to the long end of the bond market to have zero borrowing costs, to reshore manufacturing, to sell treasury debt bonds at a much longer duration at a zero borrowing costs, redeemable in gold. I think they're going to do this. I truly do. And I guess we'll see. But I think to save in dollars now is the dumbest thing you can possibly do. You're destined to go broke. They're going to destroy the value of the dollar. They are going to inflate the crap out of it. There is no other way, period. So that is my thesis right now. And I'm very, very convinced that this is something that they're, if not implementing right now, it is, by all of the things that we hear and see. It'd be too long for me to go through the whole litany of them, but I think that's where we're going.
Gold and silver have once again captured the spotlight as America teeters on the edge of unprecedented financial and political instability. With Donald Trump's recent surge in polling numbers despite multiple legal challenges, and the U.S. economy walking a tightrope of inflation, rate uncertainty, and record-breaking debt levels, it has become abundantly clear that the fiat system, rooted in endless money printing and blind trust, is broken. Gold and silver are not just alternative investments anymore. They are lifeboats in a storm of economic and institutional collapse. Every fiat currency in history has eventually failed. The US dollar, once backed by gold, now floats on the whims of policymakers and central bankers. The Federal Reserve claims to fight inflation, yet it created the very problem with years of near-zero interest rates and trillions in stimulus. And now, with CPI inflation numbers still sticky and consumer sentiment in freefall, they've cornered themselves into a lose-lose situation. Raise rates and tank the economy, or ease and ignite another inflation wave. Either way, fiat suffers, but physical gold and silver, finite, real, and time-tested, thrive. In the last few weeks, silver has quietly outperformed many other assets, pushing past key resistance levels while being largely ignored by the mainstream media. Gold, too, is testing all-time highs amid global central bank accumulation. Why are nations like China, Russia, and even Poland buying tons of gold while telling their citizens to hold cash? Because they know what's coming. They know the dollar is losing its dominance and that the next financial system won't be built on paper IOUs. It will be anchored to something real. Trump's return to the headlines isn't just about politics. It's about economic sentiment. His recent statements slamming the Federal Reserve and calling for a return to sound money are echoing louder than ever. Trump understands that Americans are losing faith in the institutions that manage their money. Confidence in the Fed is near all-time lows. The Treasury is issuing debt at a breakneck pace. Social Security is on track to go bankrupt. Meanwhile, the stock market continues to float on speculation, artificially supported by Fed jawboning and tech hype. But beneath the surface, cracks are forming. Young investors are waking up. They're beginning to see the trap. Save in dollars, and you're guaranteed to lose purchasing power. Trust in stocks and crypto, and you're subject to manipulation and regulatory whims. The only assets with a 5,000-year track record of preserving wealth through every war, recession, and regime change are gold and silver. And right now, silver is arguably the most undervalued strategic asset on Earth. Not only is it a monetary metal, but it's also essential in solar panels, electric vehicles, and industrial applications. The supply is shrinking while demand is surging. This is not a speculative narrative. It's a supply chain reality. Meanwhile, America is sleepwalking into another debt crisis. With over $34 trillion in national debt and interest payments now rivaling military spending, the writing is on the wall. The government has no plan to pay it off. The only tool they have left is inflation. Silent theft through currency debasement. If you're holding dollars, you're the victim. Every printed dollar makes your savings weaker. Every stimulus check, every bailout, every new government program funded by the printing press, it's a transfer of your wealth to the state. Look at the banks. Regional banking stress has returned, and big names are warning of a new wave of collapses. If even one major institution falls, a domino effect could ensue. And with FDIC reserves under pressure and trust in banks declining, people are beginning to ask serious questions. What happens to my savings if the system locks up? If you can't hold it, you don't own it, and that's why physical metals are making a comeback. Gold and silver require no counterparty. They cannot be hacked, frozen, or inflated away. They don't rely on government promises or Wall Street gymnastics. In times of war, regime change, or collapse, like the world is inching toward now, they are the final fallback. Just this week, Trump warned that America is closer than ever to losing the dollar as the world reserve currency. That's not alarmism, it's fact. The BRICS nations are actively developing a gold-backed trading currency, and the world is watching. The petrodollar era is ending, and with it, the dollar's dominance. Gold and silver will outlive fiat. They have outlived every empire that thought it could print its way to prosperity, and they will outlive this one too. While Wall Street distracts you with AI stocks and debt-fueled bubbles, the smart money is quietly accumulating hard assets. If the monetary system resets, and history shows it always does, those holding metals will have purchasing power while everyone else scrambles for crumbs.